Good morning and welcome to today's webinar on emerging market equities. My name is Anja Wahlscheidt and I have with me CIO Jakob Grapengiesser and senior analysts Sanat Sachar and Hao Zhang. Jacob, Sanat and Hao cover our investments in emerging markets and have just returned from trips to India, China and Brazil, the main emerging market countries. I'm curious about their observations and takeaways from these trips. And if you, as listener to this live webinar, have any questions, please use the chat function in Teams and we can address your questions during the session. So Jacob, before I ask you about your trip, a more general question. Emerging markets have outperformed developed markets in recent months. What are the main reasons for this development? And do you think that this is a short-lived rally or rather a turning point for emerging markets?
The obvious short-term driver has been the Chinese reopening. I think we spotted this quite early. Hao's mother is actually working in a hospital in China, and we got some inside views, I guess, on how the situation on the ground was looking on in China. And with that in mind, we actually shifted our portfolio more towards reopening trades in China. But that was already back in November. I think since then, the market has been sort of discovering this reopening theme. Chinese GDP has been upgraded by 0.8%, so from 4.5 to 5.3 by the IMF. This has been the key turnaround in terms of sentiment for emerging markets. China is roughly 1/3 of the index for emerging markets, so it's obviously the biggest country. Other reasons for emerging markets performing is probably the dollar strength has peaked. The dollar is slightly weakening. This is a good thing for emerging markets. It's historically one of the most important correlations. I personally think that a lot of the investors globally, they were focused on the US and especially FANG's US tech. And I think, that trade has been questioned. Those stocks are no longer performing. And hence you need to allocate somewhere else to get this type of growth. And this is also part of the flows we're seeing into emerging markets, which is driving the performance. So since November, emerging markets has outperformed by 10%. Will this continue? Yeah, I think it's hard to say, as always. I think what we can say is that the developed markets, US, Europe, they are going into recession, or at least into scenario of growth will be ±0, whereas growth in emerging market is still high and actually accelerating. So if you want to be where things are growing, companies are growing, economies are growing, you should be exposed to emerging markets.
Yes. So you've just been to Brazil. So what surprised you on this trip? What are your key takeaways?
Yeah, we attended a huge conference. I think it was perhaps 3,000 people there, and maybe only 10 foreign investors. So it was very local conference. I think what surprised me a bit is that it's a very professional investment community, at the same time very emotional, very Latin. If things are either just fantastic or really, really bad. I think now we're at the point when sentiment is probably all-time low. You have a new president, Lula, and everyone is really super negative on anything he says. So he has made a few statements that are negative for markets. He has questioned central bank independence, which is something he shouldn't do. At the same time, he doesn't control the Congress, so I don't think he can actually implement a lot of these things that he's stating. And I think at the end of the day, politicians, they make a lot of statements, but typically they are a bit more restrained in their actions. So I think probably now is a good time to look at Brazil. And some of the valuations we're seeing are also quite ridiculous. I mean, they come down by 70, 75, even 80% for select companies, not for everything.
Also a good opportunity. So how did this trip change your view on the Brazilian market and companies? Any specific gems you found traveling there that you would not have found maybe by desktop research?
Yeah, I mean, you see the local investment community, as I said, they were very negative. The foreign investors, they typically take a more kind of measured view, but since there were only 10 foreign investors there, and many of the companies I met, I know that just no other foreigner met. We met with a bit more than 20 companies, and I think out of those, you probably found 3 that are just outstanding. We found, for example, it's a bit of a strange company, but it's waste management and emergency response. This is growth sectors. It also fits in with our kind of Article 9 fund. This company 1.5 years ago was trading at 18 times EBITDA. It was like a darling of the market, high growth, great management team, etc.
Emergency response, what is it?
Well, emergency response is a very wide definition. It's everything from if there's an accident on an oil platform, these would be the guys handling the emergency response, to just ambulance services. So very, very wide range of services. And for the waste side, it's just, specialized type of waste management, but obviously this is becoming, a more important business, and also in terms of sustainability, it's obviously more important, right? So this company was trading at 18 times EBITDA 1.5 years ago. Now it's trading at less than 5 times EBITDA. I mean, these sectors didn't really change, right? It's not less waste now. There are not fewer emergency responses now. I mean, the underlying growth is completely non-cyclical, and they're still growing at 25%. So, something like that, you wouldn't have been able to meet if you were attending a European conference. I mean, you need to just go there and see this type of company. So there were a few examples like that, some gems that we actually found that we will most likely include into the portfolio.
Fantastic. Thank you, Jacob. So Sanat, you've just been to India. So where did you go and how many companies did you see?
Yeah, it was a very interesting trip. So I was in India for almost 2 weeks. So the trip was divided into 2 parts, I would say. So first part, I was meeting the corporates during a conference. So I met around 15 companies over a course of 2 days. So the idea was to meet the CEOs, CFOs of the companies, understand from them their growth plans, how they see the business going forward. But I would say the next part was more interesting, where I visited. So that was second part was more about the on the ground. So I visited 3 cities, 2 tier 1 cities and 1 tier 2 cities, which is like kind of a low income kind of city. And I was really going on the street, speaking to the largest distribution guy of FMCG products, the store manager of a largest jewelry company, store manager of an apparel company who sells to really like middle income to lower middle income segment. So I think these are very, very important because these are the people who really understand what's happening on the ground. They are the first point of contact for all the consumers. So it was quite nice to learn from them how they see the consumption demand picking up, how they see the consumer response. Do they see people coming to the stores and really buying, or they're still shopping around looking for things, or are they downgrading products, are they upgrading products? So that was quite interesting for me, I'd say.
Yeah, what is I just have to ask you this because it just made really big news here as well. So what's the latest on Adani Group?
Yeah,
are they taking down the Indian market?
No, I think this is the most discussed topic among the foreign and the domestic investors. So just to put things context around it, so Adani Group, there are 7 companies in the group. At the start of this year, the total market cap of the group was around $220 billion. And the guy, Mr. Adani, Mr. Gautam Adani, who was the founder of this group, his personal wealth was around $120 billion. And he was the 3rd richest guy in the world. So yeah, we're talking about big numbers here. So I think at the start of this year, actually slightly 1.5 months back, Hindenburg Research came up with a report that these stocks are overvalued, and we agreed with this kind of outcome or this kind of result, and that's why we had absolutely no exposure to the group directly or even indirectly. So we had no exposure to even the companies which are associated with this group. So I think that was very clear in our mind. But I think the biggest question was, since these are big numbers and this is a very big group, if things go south, what will be the impact on the rest of the economy, or will there be any spillover of things happening in this group?
Exactly.
So during this trip also, and even before that, I spoke to a lot of banks to understand what kind of exposure these banks have to this group. So most of the bank, or actually all of them, just said the similar answers. So they had 0.5 to 1% of their loan book exposure to the group. So again, from bank's perspective, it's not systematic in nature in any way. So even if things go south from here, which I don't think so is going to be very, very bad, but let's say even things go bad from here, it's not going to completely become a systematic issue where banks are in trouble. So that's, I think, one part of it. Second part is from the investor community. So I was speaking to a lot of brokers, other asset managers, which I think is a part of our process also, just to be aware of what's happening with the other investors. So none of them had a very big exposure to that. So I think even from the investor market sentiment perspective, it was not a bad thing to happen. And that's what we see in the numbers also. So since the, let's say the report, this Adani Group stocks are down almost 70% plus. So it's like $100 billion has been wiped out, but the rest of the market is down only 4%. So yes, not the best of the headlines you can hear about, but it's a very secluded event. A lot of things are happening within the group, but there's no spillover to the rest of the market, from the banks, from the real economy, or even the market sentiment perspective.
Good to hear. So what sectors do you focus on? What do you think is going to do better than the general economy? I hear a bit of consumption, I guess.
Yeah, I think that's the one thing which is very, very interesting. So India is a great market, but what to buy? I think that's a big question.
Yeah.
So I always say there are a lot of Indias which in one India. So if you look at the tier 1 city, and this is what I was talking about during my trip. So I was not just going to the tier 1 city, Delhi and Mumbai. I was going to another city called Lucknow, which is a tier 2 city, very different kind of population. So I think the consumption structure is very, very different in every city, every type of city, every kind of population. So one thing which we really like is, so last couple of years during COVID with work from home and all these things, we have seen ballooning income for the middle income segment, but the rural income was lagging behind because there was last 2 years of, firstly we had the COVID lockdowns, and then we had higher inflation, and these people were mostly impacted by higher inflation and higher commodity prices, I would say, because these are farmers who have to buy urea, fertilizer, seeds, petrols, because they want to run their tractors and all these things. So I think they had the biggest problem during the last 2 years, and their consumption was going down. And sorry, just to highlight this, when I'm talking about rural population, we're talking about 1 billion people. So this is a very big chunk of population. So now, even during the visit, I saw that this is just bottoming out. Now things are recovering, inflation is stabilizing, commodity prices stabilizing. We had a very good harvest season. So this farmer income is poised to increase from here. And one thing which we like, and one name which we like in this theme is a bank. So this is the bank called Karur Vysya Bank. We started investing in this bank last year. So this bank has a special focus on rural income. They have 25% loan book to rural income, rural farmers. And when they're giving these loans to these people, they're not giving loans to buy nice houses or nice cars. They're really giving to this one farmer who has a very small land plot, who's doing farming for his own. So he wants to borrow to buy seeds, fertilizers, maybe a little bit of tractor. So I think this is very much in line with our Article 9 ESG focus. I think very, very helpful to support this income. And this bank has seen very good growth last year. So their earnings were up almost 100%. The stock price also went up 100% last year. And this year also we expect very similar kind of results. So I think this is the kind of sub-theme we like, niche kind of names, not very well covered. This stock is covered by, I think, almost no international brokers. Even local brokers don't cover it much. So I think this is one thing which we really like in India.
Yeah, sounds great. Great. So now to China. We have Hao with us, who is based in Hangzhou, a city of 12 million people southwest of Shanghai and home to Alibaba. So Hao, Chinese government went from basically the world's strictest COVID restriction to pretty much no restriction. Is COVID over in China?
Hi, Adam. Thanks for having me. So let me just give you some numbers first from China CDC. In terms of total fever clinic outpatient number per day, the peak was at 2.9 million on 23rd of December. As of the most recent data on 16th of February, the number was 124,000, which is a decrease of 96%. And then the peak of infected inpatient number was 1.6 million on 5th of January. And then last week, the number was 20,000, a 99% decrease. And in terms of death toll, the peak at the hospital was 4,300 on 4th of January. And then last week, the number was at 6, a single digit, on 16th of February. And then lastly, for people aged 60 or above, the vaccination rate, the full vaccination rate right now at 96.6%. It's quite unbelievable in China, I think, but then that's the official number we have from China CDC. So personally, I cannot conclude COVID is over in China, because when I go out, I see almost all services industry people wearing masks, and then probably around less than half of people on the streets with their masks on as well. But I do think COVID is probably not on the top 5 or 10 list when most people are asked about their concerns in life.
Yeah, but it's probably really good that they are wearing masks just to prevent potential infections.
Yes.
Yeah. So how do you experience the reopening now, and what's happening in the market?
Sure. So reopening was actually quite abrupt in December, and then we have been, as I just mentioned earlier, the peak was in late December and then January. After that, things recovered a bit. So people starts to talk about recovery, which I think right now is on track. So if we look at January manufacturing PMI in China, the number was 50.1, which improved from 47 in December. And for non-manufacturing PMI in January was 54.4. It's actually much better than December 41.6. And then this is really thanks to the sharp rebound from construction and services industry. And then if we look at some high frequency data, mobility numbers such as highway traffic and subway usage are now above pre-COVID levels. And then post-Chinese New Year construction recovery is actually stronger than 2022. Also, service consumption index and secondary housing sales are both recovering. So I would say things are really on track. We would probably have some better knowledge next week as we will see the February PMI numbers on 28th of February. And also starting from next week, we will have the most important policy event in China, the 2 sessions, from where we will see the government reshuffle and then more details on economic policies, including growth target, fiscal and monetary policies, etc. So let's see. And then in terms of the market, yeah.
Sorry, I just thought, do you expect more more support from the government for the economy?
Definitely, I would say so, because last year the target set in March 2022 was 5.5% GDP growth per year, and then the final number was 3%, which is really a disappointment. But then the excuse or the reason was really because of COVID controls, etc. This year we don't have COVID control as an excuse, so let's see what the outcome would be. But highly likely, I think the government will probably set a target at around 5 or 5.5, and then yeah.
Right.
And then, sorry, you mentioned about markets, right? So recently we did see some corrections in China, very likely due to stronger dollar and then more hawkish Fed expectations. But I guess it's not really like unreasonable after MSCI China index rallied by around 6% since late October last year. And then for 2023, if for 2023, let me just quote that Goldman Sachs predicts MSCI China index would go another 24% up, and then
24%.
This is really
that's massive.
24%, yeah. And then this is on the back of recovery in economy and corporate earnings. So the first round since November was on multiples re-rating, and then this round economic recovery.
Wow. So when you speak to companies, what's the sentiment when you meet companies in Hangzhou and other cities?
I would say overall the companies are positive about 2023. So let me give you an example. One sector we invest into and then I follow closely is the energy transition. So I speak regularly with industry players, companies and experts. So what they have been saying is that the solar panel makers have been increasing their utilization rate in January, February on a month-on-month basis on the back of strong client orders, especially for March and April, after the projects restart after Chinese New Year holidays. So if you have a look at the solar supply chain product prices, you will easily notice a correction in December due to companies destocking, but a very sharp V-shaped recovery from second half of January due to strong downstream demand. This is definitely more than the seasonality effect which we usually see. So I would say, in general, companies are expecting a good 2023.
Good. Nice. So this webinar is actually coming to an end. We want to keep it to 20 minutes. And I see we have one question from the chat. I'd say this is a question to Jacob. Inflation is a major topic in developed markets. Please comment on inflation risk in emerging markets.
Yeah, I mean, when we speak about inflation in developed markets, it's very high. These are, numbers we haven't seen for very many years, but and it's easy to think that you have the same inflation problem in the whole world, but actually you don't. In China now, the latest inflation number is 2.1%, and that's after reopening, right? So after reopening, you would think that inflation would sort of kick in or significantly increase, but it's still only 2.1. In India, it's 5.4%, which is sort of where it typically is in India. It's a little bit higher because it's your typical emerging markets where you on average have a bit higher inflation, but it's still just within the normal range. So again, emerging markets, you have high or increasing growth. 90% of the GDP growth this year will come from emerging markets. Half of it will come from India and China alone, together with inflation very much under control, which is a pretty good combination.
Absolutely. Yes. So thank you, Jacob, Sanat, and Hao. And thank you so much for listening in. If you have any questions, please feel free to contact your IR representative. And I hope you can join us next time, and have a good day.